Okay, in today's episode, we are talking to Craig from TF Metals, the one and only Craig. Now, one of the most interesting researchers and longtime researchers into macroeconomic climate and specifically into precious metals. Now, before we get into that, I just want to encourage everyone to please hit the like button on this side right over there, this side right over there. Leave us a comment down below. Let us know your price predictions for both gold and silver in 2021. Leave a comment down below and let us know what you think it's going to be. We're going to be getting Craig's take on that. Last but not least, give a shout out to our channel sponsor, Vizsla Resources, which I heard is changing their name to Vizsla Silver here pretty soon. So getting to be good timing, one of my favorite silver stocks, and also absolutely love the CEO, Mike. So shout out to Vizsla and encourage you to check it out. So thanks, Craig.
Hey, Jake, nice to see you, my friend.
It's good to see you too.
Holy cow, what a fun time we're having as of late. It sure has our interest, doesn't it?
It's very interesting. So give me your take on what's happening right now. You know, JP Morgan supposedly, just brought in 19 kajillion ounces of silver. So what's going on in the silver market specifically?
Well, that's a long answer. I'll go off of what you just said about JP Morgan. We don't know. There's speculation out there. So I guess some reasonably informed speculation and guesswork about how much silver they're sitting on. The only thing I think I can say for certain, and I've maintained this for years, is that in 2011, JP Morgan had come out of the financial crisis and inherited the short position that Bear Stearns had. We all suspected that. Bart Chilton, right before he passed, the CFTC commissioner, confirmed that for everybody. They were supposed to get out, but they found it so profitable, they just kind of piled into it. And it was a naked short position. They didn't have any silver to deliver against these futures contracts. So they were really ripe for a squeeze, like some of these hedge funds, that we've seen in the equities and the like in the last couple of weeks. So what happened in 2011 was just an organic rally, based off of a falling dollar and everything going on with QE. But then the last stage of it, from about 35 to 50, was all on a short squeeze of JP Morgan, where price keeps going up and now you're more underwater. And so now you've got to, cover some, that's buying pressure, and the price goes up some more. And it culminated in two things: 5 margin hikes in 9 days, CME Group stepping in to save JP Morgan, and a rate on a Sunday night of $6 in 10 minutes to set all this off. Well, and then behind the scenes, the CME Group rubber stamped in really short order, like 30 to 60 days, JP Morgan silver vault for the COMEX. So they began then taking the next 5 or 6 years regularly, every 2 months, taking deliveries on the COMEX for their house account. And you can go back and track it, 1,000 contracts here, 1,000 contracts there. Suddenly they got 150 million ounces in their COMEX vault, which gave them a monopolistic control and the ability to apply up to 30,000 contracts short at any one time and call it a hedge. So they've really had powerful control. Now, whether they have, a billion ounces or 500 million ounces, and all that's really just conjecture and people, trying to connect some dots. But what we do know is they've got all that silver sitting there, COMEX vault. What they'll do with it, we'll see. We watched them get squeezed a little bit last summer, and suddenly they had to deliver out 6,000 contracts, which is about 30 million ounces. So then they maybe stepped back, and price exploded in July and August when they did. So anyway, that's a little background on them. I still think they're in there trying to control price. As this then pertains to the present day, JP Morgan is the custodian, which means they're the ones responsible for storing and inventorying all of the silver that's allegedly in the SLV, the largest exchange traded fund. And it's that SLV, which is, it's nice that all these silver squeeze folks have piled into it in the last few days, but it's probably not the least helpful way that they can do this. Okay. The banks that are called authorized participants of the SLV, meaning they are the only ones that can add and redeem metal. You and I can't. Hedge funds can't even do it. You have to be one of these bullion banks to do it. Those banks, if they see the order flows coming in, they might hedge themselves by buying some COMEX futures, but really that's about the only immediate impact somebody that would have on the silver price by buying the SLV. And now the scam that's been, I wrote this morning, Jake, I made it a public post, so maybe I'll send you the link. You can put it with this podcast. But I wrote this morning, what came to mind, because the numbers are so outrageous, I'm reminded of the Nazis in Mein Kampf. And then this was picked up by Goebbels, as all part of the propaganda machine. Hitler suggested that if you're going to lie, make the lie so outrageous that people will think, well, this must be true because it's so outrageous and colossal. You kind of go full circle on the lie. And that's kind of what SLV is. They claim, Jake, the fund itself claims to have added 110 million ounces of silver in the last 3 days. Come on, man. Give me seriously. That's more than 10% of global mine supply, right? Or just logistically, Jake, for God's sake, the standard wholesale size of a bar is 1,000 ounces. It's like 60 pounds, right? 110 million ounces is 110,000 of these 60-pound bars. Come on. It's clearly just a shuffle of paper that's unallocated, that if the SLV buyers and holders now just give up and sell, all those, future promissory notes just be torn up. So anyway, I'm sorry if I'm not sure if that's what you're asking me, but that's
why do we invest? Why do we invest in something like this that seems like it's a bit of a Ponzi scheme? Why are we investing in something that the price is so methodically controlled? Is there hopes that it even goes up?
Right. That's ultimately a question, especially for the short-term trader, right? It's like, man, this game is rigged. Everybody knows it is. Look what happened on Monday, right? Price has the audacity to go up $2.50 with a big green candle on the daily chart. And what happens? You get a statement from the CFTC saying, yes, we are very closely surveilling for fraud and manipulation of price on one $2.50 day. Jake, including now yesterday, we've had at least one $2.50 down day in each of the past 5 months. That didn't seem to bother the CFTC. So what do? They raise margins. Okay, so it's going to cost you more to hold that contract if you're a futures trader. And then if the price goes down, you got to cough up that money immediately, or you're going to get blown out by the margin clerk at your futures firm. So they raise margins, price starts falling, and then you get this, this vicious cycle. That forces some margin closing selling, and then that makes price fall further. And then that puts more positions that were bought a couple of days ago underwater. And then those people get a margin call and they sell. And pretty soon you're down $3 like we saw yesterday. So yeah, it's collusion and it's manipulated against you. So for the short term, that's a losing casino game. I gave up on that a long time ago because you're just going to be wrong more often than you're right. And then in a manipulated market like that where the banks that control it can use it against you. Come on. That's pretty tough to consistently win. So I understand it from a trading standpoint, but think of it from a monetary standpoint first. Okay. You've got the world of unbacked currency where the pendulum is swung all the way over here to just completely, they're just issuing it like, doesn't even matter anymore, right? Here, another trillion here, another trillion there, and the Fed's going to monetize it. To the point where the only reason it has any value perceived at all anymore is because people still accept it, still accept the dollar. They start to lose confidence in it. That value is going to fall pretty fast because there's so many of them. So eventually that pendulum swings all the way back to a currency system with some kind of sound money and backing, and silver's been money even longer than gold. So you got that. The other part of it, though, is, and again, I was trying to think of it as you were asking me the question. I was trying to think of a relevant way to answer this. Think of like rent control in New York City. Maybe is the first thing that comes to mind. You know, living space is so tight in New York City, and I don't know how many other cities do that. They have rent control, which caps the actual amount that people pay, right? Well, the value of it is actually because, you know, inflation, everything else should be far more. And that manipulation holding that price back, the farther and farther it goes, when that manipulation is removed, you're going to get this huge, massive reset higher. And that's what's happened to silver over the last couple of decades. The price has been manipulated and held low for so long that the dynamic that should be pushing up has been restrained. And so if that dynamic's removed, we have no idea what the actual price of silver would be, because every single ounce that's publicly available has been levered and relevered and hypothecated and rehypothecated so many times that there are probably 100 beneficial owners for each ounce. And so when everybody shows up at the same time saying, no, that's my ounce. No, that's my ounce. No, I got a piece of paper here that says that's my ounce. The hell's really the prize? And so for the long-term holder, you've got that sound money aspect. And then second, the total distortion of the price discovery method that once we shove these banks out of the way and get back to some kind of physical price, it's not going to be $27.
So then is it just are we just wishful thinkers hoping for a day that the price manipulation explodes? Or is there a feasible roadmap or plan to have higher silver prices, whether that's, you know, your friend Eric Sprott getting involved and some other, you know, hedge funds seeing that there's blood in the water? What's the roadmap here? Or is it just wishful thinking that we hope one day it occurs?
No, it's not just wishful thinking. We already had a great year last year, up 48, 49%. My forecast this year, without all of this stuff factored in, because who could have seen this even a month ago, was in a commodity bull market that we're generally starting to see now. After about 8 or 9 years of general decline, you know, a lot of commodity indices are starting to break out. And I still think, even though it's, you know, it bounces, I think you have a declining dollar to push that along as we go through this year. There are a lot of kind of like mainstream analysts out there, investment houses, sell-side research firms that have $40 targets, $50 targets for silver, regardless of everything else, just because it's such an important industrial commodity. And that's not even having that price target in place, didn't even take into account this soaring investment demand.
Right.
And so of all of the silver that gets mined every year, a large part, let's call it maybe 60, let's just call it 2/3. It gets chewed up and consumed in industrial purposes, you know, solar panels, you know, all that type of stuff. The other third is for monetary investment, people buying eagles, you know, and maples and stuff like that.
Right.
Well, what happens if we double that demand this year? If people, instead of buying the SLV, just keep buying physical metal, well, then eventually that's going to sort itself through price. Because, Jake, this happened back in March, and you'll remember this.
Right.
Remember when COVID was kicking in and, you know, the liquidity was drying up and the markets were freaking out and the stock market was crashing? COMEX silver, the derivative trading, went to 12.
Right.
And everybody was like, hey, I'd like to get me some of that at 12. And then you go online or you go to your local coin shop and they won't sell it to you for less than 25. And regular people were like, what the hell's going on here? I was just on CNBC. They said it was 12. Well, that bifurcation of the market calls into question the legitimacy of the entire price discovery scheme, where you're doing it based off of these phony baloney derivative contracts.
Yeah.
And so at some point, even though we had QE to infinity announced, you know, shortly thereafter, we were going to get those prices back together. And we met about in the middle, sorted all that out, and then we went from 20 to 30 last summer. The same thing is happening now. I mean, everybody, all this attention in silver, and everybody knows that dealers don't have any of it. And it's all sold out. And they're like, I don't know when we're going to get any. And yet it falls $3 yesterday. If you're like, what the hell's going on here? Same thing will happen again. Either that premium is just going to have to completely collapse and fall all the way back, back down to you'd be able to acquire it close to that COMEX price, or they're going to have to allow higher prices because it makes the whole $27 thing completely illegitimate. You see what I mean?
Yeah, and that's what I only consider the spot price as it pertains to mining stocks. It just otherwise it's the price for mining stocks. That's it for me.
Right.
And so I even had my mom, who's mainstream Southern California lady. She knows I've done well in my mining stocks, and she owns a bit of silver stocks. But she thinks I'm a little crazy, and so she called me and she was like, what's going on in the silver market? Yeah. And I was like, Mom, I've told you, this is like the paper price is BS. And so there's a lot of people that are starting to wake up, and in the least, even if, this run on retail demand stops, I think the damage has been done where there's a lot, especially when the price starts going closer to 40. And those same people that heard, this 72-hour news cycle about, oh my God, buy silver. Those same people, when it hits 40, are going to be like, oh shit, I probably should have bought silver. So let me ask you, what are your personal price predictions for silver and gold in 2021? And for everyone listening, I'll put the link to Craig's research on this free report that he has for 2021 specifically. That's in the description.
And this is always a fun exercise, Jake. I started doing this I've been running TF Metals report for.
You were pretty accurate. Didn't you predict 1880 for gold? Yeah. You were pretty damn accurate.
Yeah, we've had a good couple of years with this. The site's been around for more than 10 years, but I only started writing these reports about 5 years ago because it's ridiculous. It's folly to do because, Jake, if I'm right, nobody cares. They just say, well, anybody could have seen that coming. You're nobody's. And if I'm wrong, oh, what an idiot. He said this was going to happen. And then even when I'm right, I got people that say, oh, what an idiot. The guy hasn't been right in 10 years. And it's like, how do I? So, the run that we've been on stretches back to November and December of 2018 because the Fed had spun these plates in this illusion that they were going to, remember, they were going to cut their balance sheet, normalize it back to $1 trillion. It's now what, 7 or 8? Right. And they were going to normalize interest rates, which, would to service all of the existing debt at 5 or 6%. Right. So anyway, they got it up to about 3% on the 10-year treasury. And the stock market started to collapse in late 2018. And so recognizing that, I thought, okay, they've pulled this, the rubber band as far as they can go. And so where we'd been trading sideways in gold and silver for about 5 or 6 years, never getting above 1350, I thought, okay, this is going to be the year we're going to break out. And I put a target out in 19 of 1520, somewhere around 1480 to 1520. We actually finished the year at 1519.95. So that worked out okay. So then I thought, not knowing about COVID, I thought, well, why wouldn't this continue next year? And when I wrote the 2020 forecast, I thought, well, just, average bull market gains about 20%. That would be about right. So I came up with $1,800 gold. And I thought silver would run into a lot of resistance in the low 20s. So I didn't know if we could get through there. And obviously we had a much better year than that. And COVID, again, you couldn't foresee that. Well, then as I'm writing this year, again, the conditions are the same, right? What's Biden going to spend? Like $5 trillion? I mean, it's outrageous what they're doing. I mean, we're headed down that modern monetary theory path where the Fed just monetizes everything. And I thought, well, it's not going to be easy, right? But why wouldn't it just keep going up? And plus, you could say the central banks want a higher gold price because they're trying so hard to foster inflationary expectations. So I went back and looked. Again, average bull market gain, the last time we had a 7 or 8 year run in gold was about 20%. So 20% on top of 1,900 is 2,300. And then usually when you make a new all-time high in just about anything, you make those new all-time highs and then you get some notoriety and some headlines and some crowd and some frothiness and you overshoot it by about 10%. We go 10% past last August highs. We're right about 2,300. So there's that number again. Silver, I figured, should do better than gold. And silver's a little bit easier, Jake, because there's a chart. Gold's off the chart, right? I mean, we're well above where we've ever been, and we were projecting that too. And you're like, well, then how do you use a chart? Well, silver, we can actually use a chart. And I thought we had a shot at 38 to maybe 42 or 44 this year, regardless of all this other stuff, just because of the fundamental stuff that's driving in the first place. But man, if we keep this movement going, and the critical part to the movement is physical purchasing. You know, one tube of Eagles will help. And that's 20 ounces. You know, it's 500 some odd bucks, $600. Everybody, if we get everybody to do their part to take silver out of the hands of the banks and into your own, that is going to force eventually a deleveraging of the system. And that's when that's what we're waiting for.
Yeah, like you said, you don't even need a double in the retail demand. I mean, even if you have a 60 or 70% increase in the retail demand, there's only so much mine. So that's going to eat up at that industrial, and it should give us a nice boost. Let me ask you a final question. I know you got to run. Where are you in the camp? You know, Eric Sprott says $100 silver. Newmeyer says $100 silver. Do you think that these are realistic possibilities, or do you think those are out of the question type of numbers in the future?
Sure. The problem is it's such an important metal to a lot of different companies. Part of the suppression comes from the Silver Users Association, right? That all band together and they get the banks to help them out, and certain analysts that somehow have credibility help out, you know, and without disclosing their connection to the Silver Users Association. So how does a $100 price impact, you know, the move toward green energy and solar panels? You know, that kind of thing. Yeah, hey, it would be something we'll figure out at the time. Jake, I had a couple people ask me that this week, and I'll just go back to what I've always said, because there's price forecasts like that for gold too, right? Oh, $10,000 an ounce, you know, or they base it off of the M2 money supply or whatever. Here's the thing, and this is what I've always maintained. We don't know how much gold and silver is actually available with clear title. We don't. Every ounce through unallocated accounts and futures trading, the shenanigans with the SLV, there's at least 50 owners for every ounce. Maybe more than that, maybe 100. Now, that's just fractional reserve banking, right? If you drop off $1,000 at your local bank, they don't just put it in the safe so that you come back and withdraw it. They keep about 10% of it, and they loan out 90%. And they keep enough money in the safe so that if enough people show up, you know, needing cash because they're going out to Vegas, then they've got it. But if every bank customer shows up on the same day needing cash, they don't got it, right? It's like the run on the bank and It's a Wonderful Life. That's what this bullion banking scheme is. It's fractional reserve. And they run things like I said, the SLV and unallocated accounts, and, you know, Perth and Montreal and in Switzerland and all these other places. People do that. They want exposure to price that way because, you know, it's expensive to insure and store a big stockpile of metal. You know, that's a cost to holding it. So if you can minimize those costs by having an unallocated account where everybody's got claims on the same ounces, and it gives you exposure to price, okay. So there's a lot of people playing that game and have played it for decades. But what it leads you to is a lot of different owners of the same ounce.
They're polyamorous.
Exactly. Exactly. It's like, Jake, what if I go back to New York City for this example, and you live there, you know how expensive it is to have a car, right? Got to park it and insure it and all this crap. So you come and you park at my garage and you say, look, I only want the car if I really, really need it. Most likely I'm not going to come back and want my car. And I go, well, that's a pretty good deal. And I have, and so I offer that same deal to everybody else that wants a car. And pretty soon there's 50 people on my list that think they have the same car at their disposal and that they own it. And all I've done is just, promised it out 50 times. Well, as long as you're the only person that shows up that wants a car, that's fine. What happens when 50 people all want to go for a drive to the Hamptons at the same day? And that's what I'm getting at. So putting all this back together to relate it to silver, you asked me what the price is. Well, we don't know how many ounces there are.
Yeah.
What is price? Price is dollars per ounce.
Yeah.
And if we don't know what the denominator is, I can't tell you what the price is. So all I know is it ain't 27. Okay.
All right, good deal. All right, so yeah, my rule of thumb is always, if I own silver, the one person I trust with it that I want to hold it on my behalf is Jamie Dimon. That's my rule of thumb.
Yeah,
So,
there's words to live by.
Yep. All right. Well, thank you so much for your time, Craig. I know you got to run. For everyone listening, I'm going to have the link to his whole forecast for 2021 for gold and silver in the link right there down below. We'll also have Craig's Twitter right there down below. So I want to encourage everyone to just hit the like button on this side right over there. Hit the like button on this side. Send it out to more people. Craig gave us his price prediction, so let us know in the comments right there down below. What is your price prediction for gold and silver in 2021? And thanks for joining, Craig.
Hey, Jake, my pleasure. And yet, just one last, let's just add on that at the end. If you want to have an impact, you want to make any impact at all, whether this week or this year or going forward, buy physical metal. None of this ETF stuff. Go to whatever your favorite dealer is, your coin shop, get some metal, hold it in your own two hands, put it in a safe, bury it in the bottom of a lake, whatever you got to do, but get your own physical metal. Okay. That's the only way we're going to win.
Amen. That's a good strategy to bury it at the bottom of a lake. I got to add that to my list for next time.
There you go.
All right. Thanks, Craig.